JBlog, 12th of December 2009. As I've been saying for a long time, the most significant chart to look at in this current situation is the US dollar. That's the US dollar index. Right now, this is a chart of US dollar index ETF. It's basically a stock that behaves like the US dollar index roughly. And this is a 1 year chart. And ever since the rally in the US dollar, the rally in the stock market started, the US dollar has been on a steady decline. And the hypothesis that myself as well as certain other analysts believe in is that dollar bears have been selling the US dollar short and buying other things with it, and that's basically been the driver of the rally in the stock market, the rally in the commodities, the rally everywhere else. Short the dollar, go long something else. And that has been a very lucrative trade for a long time, almost a year. And one of these days that trade is going to end, and I believe it's going to end in tears. So what we have here is I drew a trend line onto the UUP chart, and what happened on Friday basically is that the trend line was broken. Now this is not a very steady trend line, not a very good trend line. It's just it only has 3 data points basically. One right here, another one right here, one more block down here, and then we've got the break here. So we don't quite have confirmation yet. What I've been looking at on specifically on Thursday and on Friday is the exponential moving average 1030 crossover. This crossover does not happen very often, and when it does, it is sometimes quite significant, especially when there's follow through, because as you can see from this chart, and you can look at other charts, these lines don't cross very often, and usually when they cross, they set up for longer term trends. Can be up to a year, 6 month, 9 month. Here was a slight crossover, but it did not hold. And then it didn't cross over. Here was a touch. It did not hold neither. Now we have another crossover. So here goes the good old saying about this time it's different. Well, let's see if it's different. It could be different. It feels different at this point. And basically, again, the story is that the stock market will lead the economy by 6 to 9 months. Well, this is basically 6 to 9 months here, and now the bulls are just going to have to put up or shut up. It's that simple. So where's the recovery? Where's the good economic news? Where's the jobs? They're not there. So this move has been driven by liquidity, which is what I've been saying for a long time. It's been driven by liquidity and not much else. Here's the S&P 500 chart by comparison. And again, March when this started, the other one stopped. Going up, and here we have this long-term trend line has already been broken. The shorter term trend line is still holding for now, and for now the 1030 shows as being bullish still on this S&P 500 chart. But there are some things that do not really look that good. One of them is that when we're looking at the S&P 500 as well as the New York Stock Exchange, we haven't made any new highs in quite a while. So basically for the last 2 months this market has been trading sideways. the one of the bullish things is OBV is still bullish and has been bullish over the last 2 weeks, more bullish over the last 2 weeks than it has been for a while. RSI still showing going down. The thing that concerns me um, a lot is still the relatively low VIX index, which again speaks of complacency. Um, we have these intermittent spikes, but they do not last very long. So that's one of the things that still does concern me. Um, that continue asking myself what do I not see? What do they see that I do not see? Could there be a recovery? Um, am I just seeing things too bearish? I ask myself that question a lot. But until this point, I just cannot see very much bullish stuff out there that makes me happy, so I continue being happy, being short. Um, Utilities have been doing really well. Those of you who follow me on Twitter, in my mind, people are looking for income. People have become disillusioned with capital gains. They want income, and utility stocks have great PE ratios. Well, not great, but good PE ratios, and they have good income. 4 or 5% dividend. That's not bad. Um, Other things, again, I look at the currencies. Here we have an Australian dollar. Australia is doing quite well, but an Australian dollar that hasn't been going higher over the last 2 months. We have a British pound that looks just awful. I mean, Britain is technically bankrupt, um, but of course it's politically incorrect to say that. Canadian dollar has been had a big spike here and hasn't been doing very much lately because oil hasn't really gone that much higher. The euro has fallen over the last week. That's over Greece, as well as a large European exposure in Dubai. Gold has dropped. A lot of things have dropped, and the US dollar has strengthened significantly here with oil. Again, oil does not say we'll be needing a lot of it in the next little while. And then, of course, there's the US dollar with this spike going on, and we have the crossover again of the 1030 right here. So we're looking at a bullish US dollar, which would then potentially use a short squeeze on a lot of um, the people that have been shorting the US dollar to buy other things, and that could lead to margin calls. Um, the negative ETFs, financial and real estate, haven't been doing quite that much yet, although I consider the banking sector to be extremely weak. We've now had 122 banks go bankrupt, and still the bulls are acting as if it never happened. Here's Goldman Sachs, one of the premier investment banks. Not a pretty chart so far. What else do we have? Apple. Apple has had some bad chart action over the last 3 weeks, month or so. Again, it's when the initial leaders of a rally start turning down and are then replaced by other leaders that frequently signals the end of a rally move. So Goldman Sachs and Apple going negative, definitely not a good sign. Same as always, I'm long the US dollar. I am short a lot of other things. The only thing I'm also long on is commodities, food commodities. Outside of that, as I said, short, happy, and planning to stay that way. I gotta go. All the best next week. Hope you make lots of money, and good luck.